He's off. Yeah.
Alright guys, welcome back to another video on the channel, and today I'm dropping an absolute banging video. This is everything you need to know in order to trade ICT concepts. I've put everything labeled so you know exactly what you're meant to know, so you got exactly everything you need for when we start the trading week next week. All the way down from the macro times, which time frame you should be using, which rules you should be applying by, and also just a little example breakdown here, and then we're going to get into a full breakdown of the trade we took on Tuesday. It was a lovely textbook trade, one of the cleanest setups I've seen in weeks or even months, possibly this year. It was a very clean setup, so it'll be a great example to show you guys. So starting straight off, there's two macros which are extremely high probability, which lay inside of the New York AM session. And the first macro, this is the one which we look to trade, and it's the most important macro, the 9:50 10:10 AM macro at New York local time. So that's the macro which we trade the most. It's the highest probability, and it also has the highest liquidity the majority of the time, and it will offer the best conditions for when trading. And then there's also the second New York AM macro, which runs from 10:50 AM to 11:10 AM New York local time, and that's the second macro. You'll only see us trade in the second macro or the PM macro, which also runs from 2 PM to 3 PM New York local time. So you only see us trading them 2 second macros for two reasons. One, we didn't get a trade inside of the first macro 9:50 10:10, or we took a loss inside of the first macro, and then we approach the other two macros with half position size and only looking obviously for clean setups such as an A+. We want to see a very clean setup inside of the next macro if we was to take a loss inside of the first macro. And that also diverts us to the rules. Max 1 to 2 trades a day using 0.25 to 1% risk per trade. And say you're risking 1%, or say you're risking $500 a trade. Your first trade is a loss at $500. Okay, no worries. Next trade, doesn't matter if it's the same day, next week, or next month. Your next trade, you're going to take it with $250 risk. You're going to half your risk and then stay at that until you catch a winning trade. When the next trade's not, then you're going to continue staying at half risk until you get a winning trade, and then you can go back to full position size. That's the correct risk management for when trading. So we've gone over risk management, which macros to trade, and now for the time frame. So around 9 AM or 8:30 AM prior to the market opening, you want to mark out the key and major buy side and sell side liquidity levels using the 15-minute all the way to the 4-hour time frame. So start on the higher time frame around the 4-hour time frame and mark out the obvious highs and lows. Lows, sell side liquidity; highs, buy side liquidity. Very simple. Then as you're coming close to the macro, you want to monitor price around 9:40 AM New York local time on around the 5-minute time frame and mark out the minor buy side and sell side liquidity. So mark out the highs on the lower time frame as well, because they're also very important. And then when you're approaching the macro, then drop down to the 1 to 3 minute time frame so you can look for your entries. By the time you're inside of the macro, you're 100% sure. You're like, okay, right, price is now sweeping buy side. We're on the 1 minute. We also have this previous swing high, which also diverts us back to the rules again. Anytime price moves lower, it's expected to anticipate a measure of a stop hunt on buy stops of a short-term high being taken out. What it means by that, if buy side has just been swept, so imagine we have a major buy side level here and it's just been swept for the first time. Buy side's just been swept. Okay, cool. Then you can anticipate this would be the 1 minute time frame. You can, or the 3 minute lower time frame. You can expect price to then come up, buy stops resting at this level, taken out, run on buy stops. Then you can see the real move, displacement below the previous swing low before the sweep. That will be your displacement or market structure shift, call it what you like, and then a run back into a fair value gap and an order block, and you then target the opposing liquidity. You'd run your stops around this high here, and that would be a valid stop, and your final TP at the opposing liquidity, which would be sell side liquidity. What I mean by opposing liquidity, a valid final TP would be at a major buy side or sell side liquidity, and you can run your first, second and third TP, well I mean first, second and final, at these minor buy side and sell side liquidity, whether you're going long or short. So prices come up above this previous swing high, it's then displaced lower, a run into a fair value gap, and all of this must happen inside of the macro. I can't stress this enough. If it's just gone 10:13 a.m. and you see the cleanest setup of your life, yeah, trust me, do not take it. Probabilities are not in your favor. It's all a probability game, and in the long term, cool, maybe that trade played out, but in the long term, it's not going to work out in your favor, and I'm telling you, and I'm going to save you a lot of money. There you go, take that on board, and that's it. So stick to your plans, stick to your rules, and you will be a profitable ICT trader. So I hope I've explained this well, and now we're going to get into a trade which we actually took on Tuesday, and it was absolutely textbook. So I'm going to show you guys an example of that now. Right, and here you have it. This is the full breakdown trade of this absolutely perfect trade which we took on Tuesday. It was textbook, and you will see in a minute how clean this setup was. Honestly, it was lovely. There was only one thing I could say which was wrong with it, but you know, you can't be that picky sometimes. So starting off, prior to the New York Open, I used the 15-minute time frame as we just talked about, and I marked out the previous highs and the previous lows. So you mark out this high. Why this high as well? Because the London session runs from 3 a.m. to 4 a.m. New York local time. So you'd mark this out as London highs and this as buy side liquidity. So just put simple, you don't have to write the whole thing, just put BSL, buy side liquidity, and then just put LDN highs. Simple as that. So now you've labeled the key levels of buy side liquidity. You want to also mark out sell side liquidity levels, which we can also look to get swept. Okay, simple. So we've marked out buy side and sell side liquidity on the 15-minute time frame, and you also want to do this for ES as well. We do monitor both NQ and ES. What I mean by ES, S&P 500, everyone knows that. And you want to monitor both symbols at the same time. You want to see price very correlated at the same time. And I'll show you an example of also in a minute, just before we take the trade, another confluence of an SMT, which was another confluence to this trade being very strong and high probability. So let's drop down to the lower time frame and wait for the macro of 9:50, 10:10. All right, so now we've dropped down to the lower time frame. We're just going to wait for the New York Open, and also we have no news today as well. This is Tuesday, the 11th of June, and we had no high impact news coming out at 10 a.m. or nothing. So we're going to wait for a clean setup, 9:50, 10:10 macro, and let's fast forward the chart so you can see. Okay, so we're 2 minutes before the macro, and as you can see, price has come down and swept this sell side liquidity here, which we marked out on the 15-minute time frame. We've also got London highs, which we would like to target and get taken out. And now we're inside of the macro of 9:50, and we've created, you see here, we've created the original sweep. So this is the first sweep of sell side, and we have, as mentioned earlier, that previous swing low, which what do we want to see? We want to see it get taken out, because this is where sell stops would be resting. So opposite from earlier, you'd look for the previous swing high to get taken out, which would be buy stops. Here's sell stops, and you mark this out as a unicorn setup. It's not a pattern based setup, it's a liquidity based setup. So you look for price on the original sweep of sell side on the lower time frame. You look for price to then create a swing high, which would be your displacement after it has already swept that previous swing low. So let's see if it sweeps that low. So what it's done here is created a previous swing high, which we would mark out as our displacement levels. So now price has swept this previous swing low and had a run on sell stops. You want to see price now displace higher. So that would be your displacement, and this is a unicorn setup. So we want to see price then displace through this level here. All right, so cool. Price has now had a run on sell stops. Anyone who was long here has now been taken out, and it's now displaced higher. This is the thing which I was a bit fussy about, is that it's not much of a displacement. We like to see at least like a clear displacement even up to here, and then a rally back into that fair value gap. However, it was only almost like a few handles of a displacement. It wasn't much, but we still took this trade. It was extremely clean, and then an SMT occurred at the same time as well, so it also added as a confluence to this trade. And ES, I was monitoring ES, and ES had already displaced very nicely, so that was also a confluence that NQ had already displaced. So an SMT is when ES creates a higher high and NQ creates a lower low, and it's almost the opposite, and it indicates that NQ is almost like lagging behind, and it's going to show a lot more bullish momentum which is coming through. So you can see on ES here, this is the same time and the same time frame. You can see that ES created, it's not much of an SMT, but it's still an SMT. So ES created a higher high, and you can see that ES displaced through this level a lot cleaner than NQ did. So that was a confluence to the trade and also why we took it. And then there's a bullish fair value gap for our entry. So we marked this out and we look for price to even come in and tap this bullish fair value gap, and we was going to look for an entry. As soon as it comes back into this bullish fair value gap, we would enter long, and we was risking 20 handles on this trade and targeting London highs, which was at a 74 handle gain, which gives us around a 1 to 3.7 risk to reward. Anything above a 1 to 2 we would take, but we rarely take 1 to 2s. We look for at least a 1 to 3 and above. So let's see if we get an entry on this trade. Alright, perfect. So then price came down into this bullish fair value gap, and we entered at 19.028 inside of the signals room. Everyone was alerted, and we also live streamed this trade as well. So it was a lovely trade, textbook setup. We ran our first TP at 25 handles, which is at this level here. We ran our second TP just below this previous swing high, which is at 50 handles, and we ran our final TP at London highs, which is 74 handles. So let's see how this trade plays out. And there you have it. So first TP got hit, and at that point we moved our stops to around a 5 handle drawdown. So we was only risking 5 handles on this trade, and if it was to come back to this level, we would still get closed out in a good profit on the day. And at first TP we closed out 50 to 60% of our original position size. So let's see how the trade plays. And around this point here, just before second TP, we moved our stops to break even, so it's completely risk-free trade, and we had secured 25 handles, and now anticipating for second TP to get hit. And there you go. So second TP had been hit, and at that point we closed out a further 20 to 30% of our position. So at this point we are around 70 to 80% closed out of our original position, and anticipating either a run back to break even where we get taken out with the remaining of our position, or a run to London highs for our final TP. And there you have it. It went all the way to final TP, and on Tuesday, this textbook ICT setup, we secured 74 handles, and it was a lovely trade. This week, we have not taken a single loss. 4 out of 4 trades. I know it sounds like the winter months, you know. Every week it was almost, we didn't take a single loss. We even got a win streak of around 14 winning trades in a row, and then when we took one loss of like 9 handles, everyone was like, what's going on? Because I think a few of them threw the risk management out the window because they believed I had a 100% win rate at some points. But it's always good to make sure, even when you do have a winning streak, remember in the future you can have a losing streak too. It's all part of the game, and that's why having good risk management in trading is going to save not just your life, but it's going to save your accounts in the future. And the markets can humble you extremely quickly, so just make sure you do stick to that. And that is it for the video. So that's the full breakdown and some rules which I've dropped in there. I've also dropped inside of the free group on Telegram, I've just dropped pretty much everything that you do need to know in terms of like rules, risk management, and a few more other things as well. I've just dropped like a massive almost essay inside of the free group for you lot. And if you are interested in joining our VIP room, we go live every single day on YouTube. Yes, I'm not one of them traders who send in shit signals. I stream live and I make money live. You know, I don't play games. I pull massive weeks consistently, and we've just closed out our 19th week in a row. Soon to be 20th. Next week will be our 20th week. Yeah, I know. I don't know anyone else who does it. I love to hear what you guys have to say, so drop it in the comments and I'll make sure it's included inside of the next YouTube video. Every time people put comments, I always read them and I reply to literally 99% of all the comments, and suggestions for the next YouTube video, I always put them in my notes on my phone, and I make sure that I explain it in detail every single time I drop a YouTube video. So thank you very much for watching. Drop a like, subscribe to this video, and that's it. We out.
I just did my dirty, now I gotta change my sheets. Shit be rubbing on my body, sucking till my knees get weak.